to 12%, generating about $39 million in fiscal 26. Vending machine sales of snacks would now be subject to the sales tax at a 6% rate. The film production activity tax credit. In current law, it's capped at $20 million in fiscal 26 and then declines to $12 million in future years. This would accelerate that decline to $12 million starting in fiscal 26 instead of 27. Then on local income tax, there's a provision that increases the maximum local income tax rate from 3.2% to 3.3%. Obviously, that is up to each local jurisdiction whether they take advantage of that authority. Page 2 highlights some other fees and taxes related to transportation. All these dollars go to the Transportation Trust Fund. Vehicle excise tax would go up from 6% to 6.8%, generating about $158 million. The registration fees, last session you increased registration fees. They were being phased in through fiscal 27. This accelerates the phase in to be complete in fiscal 26. VEEP fees are increased to $30, up to a maximum of $30. There's a change in the definition of a historic tag. Current laws, if a car is older than 20 years, you can get a historic tag, which means you pay less in your registration fees. It would now be a pre-1999 model to get the historic tag. Short-term vehicle rentals are currently not subject to the excise tax. They would now be subject to a 3.5% tax, generating $47 million. And finally, certificates of title, the fee doubles. So for most vehicles, that would go from $100 to $200, generating about $80 million. So those, and as I said, the Transportation Trust Fund also gets part of that capital gains surcharge from the first page. One last thing I want to explain here is page 3. In current statute, there's a senior tax credit that was passed like 3 years ago, I think, 3-4 years ago. And there's actually a trigger related to that tax credit, which says that if the revenue estimates decline from the original revenue estimate to the March estimate by 7.5% under current law, then the tax credit gets cut in half. This would change that to 3.75% being the trigger. The 3.75% would only have been hit twice in the last 25 years, both times during the Great Recession. And one of those 2 times was over 7.5 as well. So, and just to give context, 3.75% of general fund revenues is, you know, it's roughly $900 million. So it would be a pretty extraordinary revenue write-down. The rest of the document, page 4, just shows you some sample households and how the income tax changes would impact them. So you can see, for the most part, they will be reducing taxes for many Maryland households while increasing them on higher earning households. Page 5 just shows some examples of how this itemized deduction or deductions will be phased out. We can talk about that if we need to. And then the last page just summarizes the money going to transportation. So you can see that in fiscal 26, the trust fund would get a little over $500 million. Madam Chair, that is the sort of high-level tax provisions.
Okay, thank you very much. Is there a motion? Yeah, 1 second.
Madam Chair, I move to adopt the revenue summary sheet.
Second. Okay, questions? Delegate Buckle.
Thank you, Madam Chair. Thank you, Mr. Romans. I just did math really quick, and I'm not very good at it, so I want to make sure you're much better at it than me. Is the total amount, if you take out the film production activity tax credit, if you take that $8 million away, which is not really new revenues, it's just not expending a tax credit charge, is the total amount of new taxes we're about to do $1.663 billion?
Yeah,
I was just, as you were falling around, I was doing my 3rd grade math here on the sheet, and that's what it seemed to add up to, was $1.663 billion with all of this.
Yeah, it's over 1.6. I don't have precisely the way you're combining, but yes, okay. It's over 1.6 billion.
And then the other and final question that I had for you on page 4 of your sheet, the analysis of how this affects. So people making between $50,000 to $300,000, your anticipation is that, and it's obviously not the same for everybody because everyone would have slightly different tax filing circumstances. Right. But your estimation is that the average person would get a $50, $53 to $60 state income tax break. And then the local income tax change would be added to that. If the locality chooses to raise their, what we call piggyback tax from 3.2 to 3.3, I assume that would completely wipe out the local income tax savings. If Allegheny County went to 3.3, we're not at 3.2, but let's just say we were. If we went there, you wouldn't be getting any local income tax savings overall by the implications of the program. You'd just be getting your $50.
I mean, obviously you have some counties that are well below 3.2, so it's going to vary by county if someone was going up to 3.3, to what degree.
But if anybody raises, and I'm not being contentious, if anybody raises their piggyback taxes, they would now be allowed to do if you're already at the cap. This whole local income tax change thing would, by necessity, get wiped out.
It'd be different, yeah. I don't know precisely how much, but yes, we did not include that. We didn't assume that the localities will increase to 3.3 in the analysis here.
Okay, thank you. I appreciate the clarification.
Okay, Delegate Hornberger.
Thank you, Madam Chair. And the term's escaping me now, but some of these counties, I think it's called the disparity grant, you have to be taxing at a certain income level in order to receive that. So does that floor move at all, or does that stay consistent?
As I understand it, the way it's drafted, it stays consistent with current law. It does not change because of the 3.3.
Okay. And then secondly, on the tags for the historic vehicle, what happens with the vehicles that are currently tagged between 2000 and 2005?
I'm looking to the folks who draft to see if I don't know the answer to that.
Are they grandfathered or are they repealed?
No, those vehicles would no longer be considered historic. They'd have to register.
Thank you.
All of Kevin's junk vehicles.
Yeah. Thank you. I'm asking for a constituent.
Okay, Delegate, turn your thing off. Delegate Roberson.
Thank you, Madam Chair, and thank you. Just two quick questions. As far as the vending machine sales tax, how is that applied? I'm guessing as individuals go to put in their money or swipe their card, there's automatic tax, or is it on the vendor themselves?
I think it's on the actual purchase, but again, they're nodding that yes, so yes, it's on the purchase.
So it'd be on the person actually going through, I just want to get on the record just so everybody public, so if persons go, they actually swipe through. Thank you. And then the other, data IT services, could you just explain that as far as who that applies to that text there?
I'm again going to defer to the tax experts in the room.
We also have the comptroller's office here. If you would like to come up front to answer questions, we would appreciate that. And so, Mr. Butler, if you'd like to go ahead.
The tax would apply to information and data technology services that are described under NAICS sectors 518, 519, and 5415. Give me one moment, which is consistent with what was introduced in House Bill 1554. Would also apply to system software or application software publishing services described under NAICS sector 5132. And would apply to licensing of media or software rights or other intellectual property.
Thank you. Thank you, Madam Chair.
Okay, Delegate Griffith.
Thank you, Madam Chair, and thank you for being here. So I guess my first question is the changes to the income tax proposal, specifically increasing the standard deduction, but not eliminating itemized deductions. Do you know what the net effect on the counties would be as a result of that?
I believe it's a very small net fiscal impact on counties. It's in the like $25 million range, as I want to say. But
And are we asking questions on the whole thing or just on the revenue piece right now?
So we are going to perhaps adopt the summary sheet, and then we're going to go item by item for all of the things that affect this committee in terms of revenues. Not all the appropriations actions, but the revenues actions. We will go item by item
Very
after
good.
this.
And just one more question on this. So with the vehicle rental portion of this, when the car dealers were testifying, they were talking about loaners being caught up in this. Will they be caught up in this? Is there a carve out for loaner vehicles that are actually revenue losses for the car dealerships? Or will they get caught up in this as well?
Again, looking to the drafters, I haven't seen how the bill is drafted.
I think they will, and we will have to discuss that further.
All right, thank you, thank you.
Okay, any other questions? Delegate Fair.
Thank you, Madam Chair. And just very quickly, the sales tax would apply like normal sales tax for the data IT piece. And so nonprofits would be exempt. Is that still correct?
Correct.
Thank you. Thank you, Madam Chair.
Okay, any other questions? Delegate Young?
Thank you, Madam Chair. To the IT services tax, there is also the digital products tax. How do they interplay? Because I believe the digital products one is, for instance, when I buy ads from Google or pay for my ChatGPT, I'm 6% taxed, but then we have a 3% here. So I just want to get a sense if there's any overlap on those.
Digital products are attached at, I'm sorry, Deborah Gorman. I'm the Director of Legal Division from the Comptroller's Office. Digital products are going to continue to be taxed at 6%. And so my understanding is that these new provisions, the services that are provided in the sectors that Mr. Butler mentioned, those are being proposed to be taxed at 3%.
We can do it offline. Some of these tools are being sold as services. So I'm just want to get a clarity on, like what the I mean, I know that it's NAICS and I got that up, but, the definitions of them can be a little amorphous when you start talking about automations and stuff. So that's what we'll talk offline. Thank you, Madam Chair.
Certainly. Happy to take any questions from you.
Any other questions from the committee? Okay, the motion was to adopt the revenue summary sheet. As I mentioned, we will go through each item that affects this committee individually. All in favor signify by saying aye. Aye. Any opposed, please raise your hand. Okay, so for the record, Delegates Buckle, Delegates Hornberger, Delegates Long, Delegates Hartman, and Delegate Griffith are opposed. Okay, so now we are going to walk through the provisions that apply to the Ways and Means Committee. And so everybody should be looking at this long document. So you can start out by looking at item number 52, which is on page 10. And we're going to start with that. And I believe there's okay, DLS will explain.
So this is on page 10 of that document. Item 52 would increase the tax rate on casino table games from 20% to 25%, with additional revenue going to the general fund through fiscal 27 and the blueprint fund beginning in fiscal 2028. This was not in the tax summary document.
Okay, is there a motion?
I move to reject item 52.
Can you put your mic, your mic on? Put your mic. Okay. Well, Feldmark.
Thank you, Madam Chair. I move to reject item 52.
Second. Okay, all in favor signify by saying aye. Aye. Opposed? Okay, that motion carries. Item 53.
Item 53 increases the tax rate on mobile sports wagering from 15% to 30%, with the same portion going to with the increase going to the general fund through 27 and blueprint beginning in fiscal 2028. Based on the tax summary document, you would modify that to 20% with the increase going to the general fund.
Okay, Delegate Feldmark?
Move to modify item 53 as shown in the tax summary.
Second. Okay, any discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Okay, opposed are Delegates Buckle, Delegates Hornberger, Delegates Long, Delegates Hartman, and Delegates Griffith. Okay, item 60.
Yeah, item 60 is on page 12. This would cap, beginning in fiscal 2026, the amount of revenue attributable to the 20% tax rate on, from the admissions and amusement tax on electric bingo and tip jars to the Maryland Innovation Initiative Fund at $8.5 million, and the remainder would go to the general fund.
Okay, motion, Delegate Feldmark.
Thank you, Madam Chair. I move to adopt item 60.
Second. Okay, any discussion? Delegate Buckle?
That is the extra money's not going to the Innovation Initiative Fund, but roughly, is it, if that's correct, 2.5 million would flow to the general fund from the change. Thank you.
Any other discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Okay, motion carries. Item number 67.
That's on page 13. It's the second to last item on page 13. This relates to MDOT. It would disallow the trade-in allowance for vehicle excise tax if the purchase price of the vehicle exceeds $15,000. This was not on the tax summary document.
Okay, Delegate Feldmark?
Thank you, Madam Chair. I move to reject item 67.
Okay, any discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Okay, the motion carries. Item number 71.
That's on page 14. It's the third item on page 14. This would impose a retail delivery fee of 75 cents and was also not on the tax summary.
Okay, Delegate Feldmark?
Thank you, Madam Chair. I move to reject item 71.
Discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Okay, the motion carries. Item number 72.
Item 72 authorizes the MVA to increase the fee for testing under VEAP to $30 beginning in fiscal 2026, and this was on the tax summary.
Okay, motion, Delegate Feldmark.
Thank you, Madam Chair. I move to adopt the transportation revenues on the tax summary.
Okay, any discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Okay, opposed, we have Delegates Buckle, Delegates Hornberger, Delegates Long, Delegates Hartman, and Delegate Griffith. The motion carries. Item number 73.
Item 73 reduces the estate tax exemption from $5 million to $2 million and repeals the inheritance tax. 73 administration alternative would propose as part of the repeal of the inheritance tax to provide funding to the Register of Wills. This was not on the tax summary.
Okay, motion, Delegate Feldmark.
Thank you, Madam Chair. I move to reject item 73 and keep existing law.
Okay, any discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Okay, the motion carries. Item number 74.
Item 74 reduces the cap on the student loan debt relief tax credits that MHEC can provide in tax year 2025 only from $18 million to $9 million, and requires MHEC to submit a report on recommendations to better target the tax credits.
Okay, motion, Delegate Feldmark.
Thank you, Madam Chair. I move to adopt item 74.
Okay, any discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Okay, motion carries. Item number 75.
Item 75 requires beginning in fiscal 2026 a reversion to the general fund of excess resulting from the appropriations of More Jobs for Marylanders Tax Credit Reserve Fund and a transfer of $4.3 million. The administration in their BRFA testimony proposed kind of changing how the funds get to the general fund from that to when the final certificate is issued that the amount of the initial certificate goes over, so it just kind of changes the timing and how it gets there and retains the $4.3 million transfer.
Okay, is there a motion? Delegate Feldmark?
Thank you, Madam Chair. I move to adopt 75, the administration alternative, which replaces item 75.
Second.
Okay, any discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Okay, opposed. Delegates Buckle, Delegates Hornberger, Delegates Long, Delegate Hartman, and Delegate Griffith. The motion carries. Okay, item 76.
This increases, beginning in fiscal 2026, the local cost share amount for property valuation costs of SSTAT and IT costs of SSTAT from 50% to 90%.
Okay, is there a motion? Delegate Feldmark.
Thank you, Madam Chair. I move to adopt item 76.
Second.
Okay, is there any discussion? Delegate Buckle.
So 76, so the effect then, if I'm reading this correctly, is you're just going to shift costs for SSTAT, for many of SSTAT's activities onto the local jurisdictions from 50 to 90, and does that have an effect of shifting about $21 million in estimated costs to the counties from SSTAT's budget?
Yes.
That's correct. So it's a cost shift to the counties. Thank you.
Any other discussion? Okay, all in favor signify by saying aye. Aye. Any opposed? Okay, opposed. Delegates Buckle, Delegates Hornberger, Delegates Long, Delegate Hartman, and Delegate Griffith. Item 76 carries. Item 77.
Item 77 would phase out the enterprise zone property tax credit by prohibiting new properties from being awarded the credit after a certain date. Item 77, administration alternative on the top of page 16, was presented by DBM at the BRFA hearing to allow the program to continue but still phase out the state contribution to the program.
Okay, is there a motion? Delegate Feldmark.
Thank you, Madam Chair. I move to reject item 77 and the 77 administration alternative and keep current law.
Second.
Okay, any discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Okay, item 77 carries. Item 78.
Item 78 was the provision related to the income tax rates that consolidated the lowest tax brackets, phased out the standard deduction, and then made other changes. Based on the tax summary, you would want to modify it to conform to that summary document.
Okay, motion, Delegate Feldmark.
Thank you, Madam Chair. I move to modify item 78 as shown on the tax summary.
Second.
Okay, any discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Okay, opposed. Delegates Buckle, Delegates Hornberger, Delegates Long, Delegates Hartman, Delegate Griffith. Okay, the item 78 carries. Item 79.
Item 79 applies a surcharge on capital gains for tax years 2025 through 2028 for adjusted gross income over $350,000. On the tax summary, this is modified, and so you would want to modify it to conform to that.
Okay, Delegate Feldmark.
Thank you, Madam Chair. I move to modify item 79 as shown on the tax summary.
Second.
Any discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Delegates Buckle, Delegates Hornberger, Delegates Long, Delegate Hartman, and Delegate Griffith. Opposed? Item 79 carries. Item 80, excuse me.
Item 80 phases in a reduction to the corporate income tax over 2 years and requires combined reporting.
Okay, motion, Delegate Feldmark.
Thank you, Madam Chair. I move to modify item 80 to adopt combined reporting, but make no changes to tax rates.
Second.
Okay, any discussion? Delegate Buckle?
Thank you. So the modification, as I understand it then, would be Water's Edge combined reporting, not global. And it would not begin until calendar year 2028. But you will not allow, as the governor proposed, a reduction in our corporate income tax rate to occur concurrently therewith.
Correct.
Is that, am I understanding that correct?
Yes. Any other discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Delegates Buckle, Delegates Hornberger, Delegates Long, Delegate Hartman, and Delegate Griffith. Item 80 carries. Item 81.
Item 81 increases the tax rate on cannabis sales from 9% to 15%. Based on the tax summary, you would want to modify that to 12%.
Okay, motion, Delegate Feldmark.
Thank you, Madam Chair. I move to modify item 81 as shown on the tax summary.
Second.
Any discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Delegate Hornberger, Delegate Long, Delegate Griffith, Delegate Hartman. Okay, item 81 carries. Item 91.
91 moves ahead to page 19.
91, yep. Page 19.
Page 19, item 91. This authorizes a transfer from the Maryland Innovation Investment Tax Credit to the general fund.
Okay, motion, Delegate Feldmark.
Thank you, Madam Chair. I move to adopt item 91.
Second.
Okay, any discussion? All in favor signify by saying aye. Aye. Opposed? Opposed? Delegates Buckle, Delegates Hornberger, Delegates Long, Delegates Hartman, Delegate Griffith. Item 91 carries. Item 107, which is on page 21.
So this was a recommendation by the Department of Legislative Services to reduce the percentage of video lottery terminal proceeds that are allocated to the dedication account from 6% to 5%, and provide the reduction to the general fund in fiscal 2026 and 2027, and then blueprint beginning in fiscal 2028.
Okay, motion, Delegate Feldmark.
Thank you, Madam Chair. I move to reject item 107.
Second.
Any discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Okay, item 107 carries. Item 110.
110 is the provision that DLS recommended related to the film production tax credit to be $12 million beginning in fiscal 2026. This was on the tax summary that was adopted.
Okay, motion, Delegate Feldmark.
Thank you, Madam Chair. I move to adopt item 110.
Second.
Any discussion? Okay, all in favor signify by saying aye. Aye. Did you have discussion? I'm sorry, Delegate Buckle.
Tax credit from 20 to 12, and is that prospective for every year or just for this budget year?
It was already 12 million under current law after.
And so there was a proposal to move it to 20, and they're rejecting that?
No, so current law is it's at 20 for fiscal 26 and then drops to 12 for future years. This accelerates the drop to 12
by a year.
by 1 year.
Thank you.
We're speeding it up. All in favor, any other discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Okay, opposed, Delegate Hornberger, Delegate Long, Delegate Hartman, Delegate Griffith. Okay, item 110 passes. Item 112.
That's on the top of page 22. This was a recommendation to repeal the tax-free period for back-to-school shopping.
Okay, is there a motion? Delegate Feldmark.
Thank you, Madam Chair. I move to reject item 112.
Any discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Okay, item 112 passes. Item 113.
Item 113 was a recommendation to repeal the sales tax exemption for the sales of precious metals, metal coins or bullion over 1,000. Based on the tax summary, you would want to modify this to provide the exception for the Baltimore City Convention Center.
Okay, any discussion? Oh, is there a motion? I'm sorry, Delegate Feldmark.
Thank you, Madam Chair. I move to modify item 113 to make an exception for events held at the Baltimore City Convention Center.
Okay, any discussion? Okay, All in favor signify by saying aye. Aye. Opposed? Yes. Discussion?
Modify. Okay.
Yep.
Do we have to vote to modify and then vote to accept? Are they two separate votes?
No.
Okay.
Okay. All in favor signify by saying aye. Aye. Opposed? Opposed, Delegates Buckle, Delegates Hornberger, Delegates Long, Delegates Hartman, and Delegate Griffith. Item 113 passes favorably. Item 114.
This would repeal the income tax exemption of $1,000 for individuals 65 or older. It was not on the tax summary.
Okay, motion, Delegate Feldmark.
Thank you, Madam Chair. I move to reject item 114.
Any discussion? We got applause over here. Okay, all in favor signify by saying aye. Aye. Opposed? Okay, team, here we go. 114 passes. Item 117.
117 would increase the sales tax rate for high-value properties. This was not on the tax summary.
Okay, is there a motion? Delegate Feldmark?
Thank you, Madam Chair. I move to reject item 117.
Second.
Any discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Okay, 117 passes favorably. Last one, item 121 on the next page.
So 121 was a recommendation to direct to the general fund from fiscal 2026 through 2029, transfer tax revenues for certain land acquisition and reducing the amount for program Open Space Local, and provided some funding for the Maryland Park Service from the transfer tax revenues. What appropriations did was to modify that to remove the Park Service provision and transfer $25 million annually between fiscal 2026 through 2029, and the transfer would be only from the state land preservation program, so program Open Space State Land Acquisition, Rural Legacy, and Maryland Agricultural Land Preservation Program, and the transfer would be, in each year, would be proportional to the estimated revenues for those programs only.
Okay, is there a motion? Delegate Feldmark.
Thank you, Madam Chair. I move to modify item 121 as shown on the additional page and just described.
Second. Okay, discussion, Delegate Buckle?
Thank you, Madam Chair. So if I'm following that correctly, the reduction that was proposed for the local share of Project Open Space funds has been rejected or would be rejected, but the state portion of Project Open Space, as well as the other land preservation or land acquisition programs discussed, that will be reduced by 25 million, is that what you said?
That would be the amount that will be transferred per year. The difference from the original proposal.
So yeah, POS local is not harmed by this at all.
Right, but the state portion of the program will be reduced.
POS state and local would go down starting in fiscal 2027. There's no money in fiscal 2026 for that particular purpose, but yeah, there'll be proportional amounts reduced for program Open Space, state land acquisition, rural legacy, and MAL for those 4 years.
Thank you.
Any other discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Opposed, Delegates Buckle, Delegates Hornberger, Delegate Long, Delegate Hartman, and Delegate Griffith. Item 121 passes favorably. So for all of the other items in this document that appropriations has already acted upon, I will entertain a motion. Delegate Feldmark.
Thank you, Madam Chair. I move to adopt the Appropriations Committee actions related to these items.
Second.
Okay, any discussion? Delegate Buckle?
Madam Chair, as we discussed, I don't want to belabor a lot of what the Appropriations Committee did or didn't do, but I'm going to vote. I suspect all of us as Republicans will vote against it. But I did just want to clarify the BRFA amendment. It's on page 3 of council of this packet, the shorter packet, this one. Did this does this require, it lists an amount of monies that have to be transferred from county governments to the Board of Trustees. It doesn't say, because I wasn't quick enough to look up State Personnel and Pensions article. Is that the Board of Trustees related to your local community colleges? Is that where the transfer is going? For example, my county has to transfer $754,000 a year. Worcester has to transfer $700,000 a year. Is that transferring from the county to the Board of Trustees of their local community colleges for pensions? And is that codifying an increase in what those county mandated transfers would be?
I think this is just money going to the state retirement, the Board of Trustees of the state retirement system.
Okay. So does it relate to teacher pensions predominantly?
Right. One of the things in the BRFA is shifting costs from state government to local governments on teacher pensions.
And then my only other question, because I don't want to belabor it, I mean, certainly other members might have other thoughts, but on page 6 of that packet, there appears to be some significant additional fund transfers from an occupational fund apparently related to counselors and therapists of $4.5 million roughly, occupational therapists, psychologists, both around $1 million. Does anyone with DLS or the appropriate agencies have any understanding as to whether those funds are being utilized for the enactment of the program? Often when we discuss things on the floor, we hear we need a fee raise because the program can't be administered with the fees derived from the particular licensing entities or licensed entities. But yet in this document, we appear to be moving well over $5 million out of those types of funds into the general fund. Does anyone know whether or not those programs that are being funded by those envelopes are fully funded or overfunded?
So the transfer that was adopted by appropriations was about $9.5 million. It changes some of the boards and the amounts for various boards compared to what was introduced and what the initial DLS recommendation was. It leaves them, the boards at 45% of the expenses for so they have funds for their services, their current activities.
So that they had more funds. So whatever the fees people were paying that was being directed into those particular envelopes was more than what they needed to actually administer their programs.
Yes.
Okay, thank you.
Okay, any other discussion? Delegate Griffith?
Thank you, Madam Chair. I'm trying to find a document. I apologize. There's somewhere in the document that talks about shifting cost of wrongfully prosecuted individuals to the counties. Is that accurate?
Yes, the appropriations adopted a provision that would require locals to pay 50% for new settlements entered into after fiscal 2020, beginning in fiscal 2020.
I guess I'm trying to understand the justification for this because the counties don't prosecute and the counties aren't judges. So how are the counties liable for this cost sharing?
I think the logic was that the county, it's actually county prosecutions in most cases that led to the wrongful conviction. So that they should share in the pain rather than the state paying the full cost.
But at the same time, again, judges rule, juries rule, right? So I mean, that's not the county's fault or responsibility. So, and it's not the county that's prosecuting, it's the state's attorney's office. Right, why we funded by the county doesn't control the state's attorney's office, right? They're an independent agency. So I guess that's what, again, I don't understand. It's not the county executive, the county council making these prosecutions or these rulings. So why would we transfer the funds to the counties or the burden to the counties? Can anybody answer that?
Yeah, again, I think the logic was, whether you agree or not, that the state's attorneys are local government and, employees, and that so they were the ones prosecuting the cases, so that the counties should have some share.
All right, thank you.
Okay. Yeah, Delegate Buckle?
Is there any carve out for that in many situations where these individuals have proven actual innocence? They allege it's because of the result of some type of malfeasance by local police officers or local prosecutors. Is there any carve out if the alleged malfeasance was someone from, say, the state police that was not under the control? It's my only situation where I would have a real problem with that. if a state police officer did something wrong and someone went to jail for life because of it, and then you said, poor Mike Griffiths, Hartford County has to pay for it. Mike fights for Hartford County. But is there any carve out for that, any assignment of actual liability for who makes the mistakes?
No, not the way that it's being drafted now.
Okay, thanks.
Okay, any other discussion? Delegate Hornberger.
I know we're jumping around here, but were you able to score the SSTAT cost shift for the counties, by county?
We do have it. It's 21 million statewide. But
Aggregate, yeah, but do we have a county breakdown?
We do. I don't have it with me, but we can provide it to you.
Yeah, if we could get that too, thanks.
Any other discussion? Okay, so all in favor to adopt the Appropriations Committee action signify by saying aye. Aye. Any opposed? Opposed. Delegates Buckle, Delegates Hornberger, Delegates Long, Delegates Hartman, and Delegate Griffith. Now we are moving to the bill as amended, which is House Bill 352 as amended. Is there a motion on the bill? Delegate Feldmark.
Madam Chair, I move to adopt the favorable report on House Bill 352 as amended.
Second. Any discussion? Okay, all in favor signify by saying aye. Aye. Opposed? Opposed on the bill as amended. No, you can raise one hand. Delegates Buckle, Delegates Hornberger, Delegates Long, Delegates Hartman, and Delegates Griffith. Okay, that concludes our business for today. Thank you, ladies and gentlemen. Thank you to DLS and the Comptroller's Office for being here with us. Thank you.